The market told two completely different stories today, depending on when you looked. During the day, it looked like investors were running to safety, but staying inside the stock market, selling the old economy, hiding in tech. Then the closing bell rang, the earnings came out, and the hiding place fell apart. Start with the scoreboard, because the gaps in it are the whole story. The Dow took the worst of it, down 621 points, off 1.21%, to 50,687. The S&P 500 fell 56 points, down 0.74%, to 7,553. The Nasdaq Composite lost 240 points, down 0.89%, to 26,854. And the small cap Russell 2000 dropped 1.31%, the weakest of them all. Now here's the tell. The Nasdaq 100, the index of the biggest technology names, fell just 0.29%. So mega cap tech barely moved, while the Dow, the small caps, and the broad market all dropped more than a full percent. That gap is the day. The selling started with oil. Overnight, Iran launched missiles at Kuwait and Bahrain, killing at least one person, while the United States struck targets on Iran's Qasem Island and hit a tanker bound for an Iranian port. For weeks, this market shrugged off Iran headlines. Last week, it set a record high the very same day a peace report collapsed. Today, the shrugging stopped. Crude pushed above $95 a barrel. And that's not just a number on a screen. At Walmart's shareholder meeting, the CEO said fuel prices are the single biggest stress point on lower-income shoppers right now. That pressure showed up everywhere. Macy's reported its best sales growth in 4 years, but almost all of it came from wealthy Bloomingdale's shoppers, up more than 10%, while the middle-income Macy's customer barely budged. The CEO said it plainly, not all customers are equal. So the real economy spent the session getting sold. Fuel squeezed consumers, industrials, financials, small caps, while money crowded into the AI trade. Marvel jumped another 12%. Navitas ran more than 20%. The market sold the economy and bought the story. And then the bell rang. Broadcom reported after the close. Record revenue of about $22 billion, up nearly 50%, with AI chip sales guided to grow more than 200% next quarter. A blockbuster quarter. The stock fell as much as 8%. Minutes later, CrowdStrike beat on earnings, beat on revenue, posted record recurring revenue, and announced a 4-for-1 stock split, and dropped about 9%. Two of the market's favorite AI names. Both beating expectations. Both sold hard. Why? Because they'd already run so far that good news wasn't good enough. Broadcom had added $300 billion in market value in just 5 trading days. When a stock is priced for perfection, a beat is just an excuse to take profits. So the hiding place investors ran to all day turned out to be the most crowded, most expensive trade in the market. That's worth sitting with heading into Friday's jobs report, the big one, and a Federal Reserve watching oil-driven inflation as it heads into its first meeting under new chair Kevin Warsh. One more wrinkle. After the close, President Trump said Iran is, in his words, pretty close to signing a deal, so the same oil story that drove today could reverse by morning. This is a market with no margin for error in either direction. Today, the market showed you its fault line. The real economy on one side, the AI trade on the other, and then showed you that even the strong side is standing on a very narrow ledge. We cover the markets on the days that actually matter, with explainers when it helps. Hit subscribe so you don't miss it. We'll see you next time.